Hi guys, this is Sharon Mensah back with Laura Brooks from Homebridge Financial Services on part 2 of our Financial Fridays. Okay, so this part we're going to talk about the loan cost and the loan process, which is a very big deal for most people, for all people actually. So, okay, Laura, can you tell me what do you need for a down payment?
So you do not need 20% down payment. A lot of people think that you need 20%, but that's only if you're buying an investment property.
Okay.
So if you are a first-time home buyer and doing a conventional loan, you just need a 3% down payment.
Oh.
If you're not a first-time home buyer, you need a 5%. There are a couple other programs. With an FHA loan, you will need a 3.5% down payment. If you are military or active duty, you can qualify for a VA loan, which is 0 down payment. And there's also another 0 down payment option, and that's the USDA loan. Now, most people think USDA, that means farming, middle of the country. Yes. But that's actually not true. There are a lot of addresses and homes that can qualify for a USDA loan, and that's going to be 0 down payment. And it's pretty easy to look up. You can have your lender or realtor just go on the USDA website and type in the address, and it'll tell you if the home is eligible for USDA loan or not.
And I've looked at that website, and it's pinpoint, right?
It is.
Okay.
Yep, it is.
All right. So what costs make up the closing costs?
So closing costs are made up of 2 categories: the escrow reserves and then your actual cost to close the loan. The actual cost to close the loan are your application fees, the appraisal, the attorney fees, title insurance, any recording fees, anything like that. Now, the escrow reserves are going to be your property taxes and your homeowner's insurance. The property taxes will obviously change depending on what home you buy, and it also depends on the month that you close.
Okay.
Now, for homeowners insurance, they always require 1 year up front and then a 2 to 3 month buffer. So as you can probably guess, those reserves really do make up a big portion of what your closing costs are going to be.
Okay. So when we talk about closing costs and then how all those numbers add up, are there any homebuyer assistance program, down payment assistance program that can help people who can't come up with that big amount of money to supplement?
Yes, so there are a couple different options for down payment assistance programs for North Carolina. They are actually a second loan. So you're actually getting a loan for the down payment, and then you're getting a loan for the rest of the price.
So is that 2 different loans? Or
yes, it's actually 2 different loans at the time of closing. So it is forgivable after 15 years, which is great. But keep that in mind if you're doing the down payment assistance program and you think you will sell prior to that.
Okay.
Because that is going to affect your net proceeds. So
Okay.
it's not a grant, it's more of a loan, but it can be forgivable.
Okay. So it's not added into the initial price until after the 15 years? Or, I mean, how does that work? I don't know if I made sense.
There's a couple programs, and some of them are based on the time.
Okay.
So it depends on how, if you've lived in the home for so long, then they deduct so much off. That's one program.
Okay, good. Okay, so we're going to skip to the loan process itself. So after all the initial work is done and the loan is finally accepted, what is the next step in the loan process?
So once the contract is signed by both the buyer and the seller, we go ahead and order the appraisal, we lock the interest rate, and then we send the file to processing and underwriting in order to get the final approval.
Okay.
So at that point, most people think, oh, all the work is done as soon as I get the pre-approval letter. Unfortunately, that's not the case.
That's when it starts, right?
You'll have a lot more to do. There will be a lot of things to sign. A lot of times the underwriters will request certain documents. So there will be still a lot to do for the rest of the time. And then during that time, of course, you'll be doing the home inspection with your realtor and any other inspections, and then you'll also be getting your homeowner's insurance as well.
Okay, yeah, that, I mean, yeah, That's a lot. That's a big process.
It
is a lot of. Okay, I need this. I just sent it, but
Yep.
that's hey, you got to do what you got to do to get the loan through, right? Okay. All right. Is there anything that hinders the loan process? What do you find that kind of slows the loan process down?
Well, really just not getting things to the processors on time. So if the processor asks for a certain document, if you can get that as soon as possible, because everything with the loan process is step by step.
Right.
You need to do step 1 before you do step 2, and then you can do step 3. So if you're meeting a part of step 2, you can't move to step 3.
So it's
always
important.
Always make sure if your loan originator or processor is asking you for documents that you're getting those as fast as you can.
Yes, definitely, because I've seen the process slow up weeks because the person has not submitted the paperwork when requested.
And the appraisal is also a big portion
Right.
of why we need 30 days to close. Because it just takes time to get that ordered, to get the appraiser to go out there, and for that to come back. So that's really kind of the biggest chunk of time.
Okay. All right. Well, thank you, Laura, again.
You're welcome.
This is part 2 where we talked about the loan cost and loan process. Stay tuned for part 3.